Good morning, everyone. Jesse Webb, Traders Pro. Let's talk a little bit about the markets. Currently, it looks like those CPI numbers did come in a little bit hotter than expected, and futures are down pretty significantly this morning. We'll see how long that lasts at the open, whether we continue that to the downside or whether we get a bounce on that. We're definitely in that location, as I've mentioned here in the last few days, where we're getting an area where we could get a bounce. But we've also broken down through current support levels, and momentum is really accelerating. Now we could start to see some fear selling come in, which would really spike the VIX, its volatility index. It's already been up here in this upper range. Typically that's where it reverses. So when this is up in this level, the markets are typically down on the other side of things. If I show you this chart here on S&P down here, so we may see that we end up getting a little acceleration. Again, it's hard to say. We'll see how this open goes, and if we get some acceleration to the downside and get some capitulation type fear selling, that's definitely a possibility here in the next few days. But then again, contrarians can step in and look for a reversal. So keep an eye on those here over the next few days. Definitely no rush to be able to pile back in, but we're getting close to an opportunity here for some kind of a shorter term bounce. The buy-sell ratio, also, I mentioned the other day, when we get a new low on the markets and our buy-sell ratio starts to show that divergence like that, then that's also a bullish type signal. So let some of the selling kind of die down here today. We'll see how the entire day looks, but if we can get a bullish bar, there may be a bounce here coming in the shorter term. One way to play the downtrend that I want to show you here is our muscle ETFs. You can go here to this ETF Smooth Sailing, and these are some of the current strongest trending ETFs. Now remember, with ETFs, there's so many of these now that you can trade directionally, and notice these are 3x, so the returns on these are going to be 3 times the typical indices. So they're obviously going to outperform, and when they are outperforming, they're going to climb up into these 99, 100 ranks. So as an example here, real estate, it's a bearish real estate fund. You can see as the real estate market's been dropping, as the stock market is dropping, we're getting buy signals on these ETFs. So it's a great way to be able to take advantage of, and a very easy way to take advantage of, downtrends and bear markets without having to short anything or without having to go with options and trade put options, anything that has time decay. So these are just listed here in the muscle ETFs. There's several different tabs here that you can look for. These are the muscle ETFs, the Smooth Sailing. They have just slightly different scan criteria, but you're going to see opportunities here. So a lot of these, it can be pullbacks that you can trade. Here's a ultra short Qs to be able to take advantage of this trendy market. We are running into some support, and in terms of wave pattern and Elliott wave, typically a trend will last, you get 1, 2, 3, 4, 5. So within an overall uptrend, typically 5 waves, and then it'll retrace. So again, keep an eye on these locations, these zones right here, because it's going to feel pretty horrendous, but those are typically the times where you can start to step in and pick up some things. If you're just looking for trades, then the muscle ETFs are great. If you're looking for a little bit longer term, either a trade or a position type trade, then give some of these stocks a little bit of time to bottom out just a little bit. I like I said, I don't think there's a rush, and I think this next few weeks will be definitely some volatility, if not to the downside. If you're not a premium member, I've got an offer for you down at the link below. Go ahead and sign up, and look forward to having you. Thank you. Have a great day.